Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Tuesday, August 9th, 6:37 a.m. And as always, please run your player at 1.5x. First, a quick thanks to you guys for being patient while I took a little bit of time off last week. It was nice to get away. I can honestly say I didn't look at any market information, no FinTwit, no anything, no charts. First time I've done that in a long time. And of course now I'm trying to get back into it. And it's interesting how quickly you can, lose the pulse of what's going on. So as I get back into it here, but I got some very very nice notes from you guys checking in on me, both in the trading room and via email. That was nice to get that. I appreciate being in your thoughts and well wishes and all that kind of stuff. So I'm going to do something a little bit different today. Just going to go over some few market things and then run through the daily and 60-minute time frames on the indexes. Then I'm going to wrap this video, get it rendered, get it out to you, and then I'll be coming right back at you with the FATMAAN names. And I want to hit the daily and 60-minute time frames there. So I didn't want the video to kind of get out of control time-wise. So I'm going to try to hit you up with multiple shorter videos so that you can look at them at your convenience and not get totally bogged down in watching videos. So let's get right into it now. Sent out a note on Bitcoin yesterday. Very bullish setup here. We have been tracking this thing on the way down. They pulled the rug here at 28,000, had a quick $4,000 drop, and then went down further, built a base at 19,000, and you can see since, let's just call it the middle of June, has been working its way up in this ascending triangle, putting pressure on that $24,000 level. And I think if we can get a breakout there, because of this void, there's going to be a potential for a nice $4,000 quick move. And as I mentioned yesterday in the short note, if you're not into Bitcoin futures, don't have a futures account, you can get GBTC, or I think there's this BITO, BITO. You got Michael Saylor's proxy out there. There's a lot of different proxies. But of course, when you're trading those, keep your eye on Bitcoin, the actual crypto coin itself, as a read. And then, for instance, if you were trading GBTC and you saw Bitcoin hit 28,000 and stall, then you could just go over to your GBTC and close it out and take your profits. But notice the PPO momentum indicator profile is in the bullish regime, and RSI, same thing, above 50 and rising. So as long as it stays above, as long as price stays above this trend line, I think things remain bullish, and the trigger would be a break above 24,000. Notice also this big cluster of EMAs. Price is above the 8, 20, and 50, as well as this uptrend line, and that should give it a lot of support. But if it doesn't, I would expect a move back down to 19,000 if things begin to wobble. And let's say you're not even into Bitcoin at all, I think it still remains a good risk on, risk off asset class to watch. If you see a big, impulsive breakdown, I would almost suspect that you would see such a breakdown on the Qs and some of your other more volatile assets. So keep an eye on Bitcoin. Oil does not have a good technical picture. Notice the difference between the Bitcoin we just looked at and oil. Once we lost this RSI 50, we have just been living in the bearish regime since early June. And same thing with the PPO momentum. The profile has just gone totally flat. So bearish regime here, bearish regime here. Last week, we thought we were going to get a breakout here. Didn't happen. Ended up losing the 200 in gold. And now we're down here in this 89, 90 area. And so, depending on your trading style, you can be long against these lows, or you can say, you know what? Energy's not really where it's at right now. And I will wait for the breakout, both above the downtrend line and above the 200. I think that would be a very, you can do this all day long, on your 60-minute charts of oil or your futures chart. You can play this all day long. But for swing traders, I think the better trade is to simply alarm the 200 and or this downtrend line, and then take it long once you see the breakout. Then you got a much better chance of a multi-day or multi-week type move coming back up here, breaking back above 100. Checking in on NIMO, our momentum oscillator. We had come up here up towards 90, has come back. Now we're in the 52 range. Still elevated, but not totally, toasted to the upside. I think this is yellow flag country, not red flag, yellow flag. If we were to get a final push, or I want to say final, it's never final until it's final. That's all rear view mirror stuff. But if we get another push and Jack NIMO back here, 60, 70, 80, that's a time to definitely be taking some profits and heading to the bank. If we look at the stocks in the NYSE above their 50, look at the move that we have had over the last 6-8 weeks. We were down here at 7 or 9, and now, we've rocketed up to 72. And you can see that over the last, let's call it a year, we had a high here of 68. We had a high here of 62. We had a high of 74. And we had a high of 64. So sitting here at 72, we are definitely in the high end of the range, and it wouldn't be, out of the realm of possibility to start, running into some trouble. And I'll show you on the price charts coming up where those levels may in fact be. Over on the NASDAQ oscillator, again, we're up here at 54, yellow flag country. We'll have to see if it can pop 60 and go a little bit higher. But I think at this point, we need to be fairly cautious. And I was saying in the trading room yesterday, the day I come back, things look like they're getting wobbly. That's usually kind of how it goes, right? You take a week off and up every day, and then you come back and it's chop. So anyway, hope you don't hold that against me. Anyway, SPY Daily. Very interesting spot. We had come up, we had broken out of this trend line, long trend line, multi-month, broke out, recaptured the 50, and came up here to this resistance zone where we had a lot of trouble in early June. That zone between 410 and 415. And notice that the 200 EMA in gold comes right in at 415. So 415 and the 200 is definitely your main pivot on SPY. If SPY can pop the 200 and hold it, you've got a gap up here, and I believe I have that gap marked on the 60-minute chart, the exact levels. But from a technical standpoint, that would be pretty elegant to come up and fill the unfilled gap. Price likes to do that. All gaps eventually get filled. We just don't know when, because at this, let's see what that level is. I don't have it marked here. Let's call it 427.50. I'd have to put the marker on that. I don't have that available right now. But look, rejection, rejection, rejection. So if we were to pop this and get up to this level where there was prior resistance, that would be a logical place for a rejection and turnaround. May come sooner than that. We've got the CPI inflation number tomorrow. Keep that in mind as you trade today. That's going to probably be a market moving catalyst. Which way, we have no idea. But I would definitely say you have no edge tomorrow morning before the bell when that CPI prints. So if you got if you're comfortable with your risk levels, that's fine. If you're kind of out there on the long side and you get some kind of positive move today, I'm still in the camp of keep rolling higher. This is not an environment just to, camp out, go to sleep, and wait for stocks to go higher. I think, as we go higher in this bounce, every notch higher makes it more vulnerable to a pullback. Now, let's look at the pullback targets. I want you to note the posture of the EMAs. In pink, we've got the 8. In blue, we've got the 20. And in green, we've got the 50. So we've been walking up the 8-day, even moving away from it. Now we've bumped our head on the 200. I think 410 has got to hold on any kind of pullback. You get below the 8-day and below this technical level, this band of support, I think you go down to the 20 pretty fast at, where's that at? 402. So you wouldn't want to, I wouldn't think you'd want to sit idly by unless you got some long-term stuff for that, pullback. If you're trading pretty tactically, I would have, the 8-day as a mini line in the sand that after this basically uncorrected move, it wouldn't be surprising, to pull back to 400 at the 50 and then reaccelerate higher if it's going to go higher from there. As we look on the 60-minute chart, it's just a blown up view of the price action. You can see that we were down here at 410, made a move up to the midpoint of this very nice channel that we've got built over the last quite a number of weeks. And now we're down at the bottom of this channel where you'd expect to see some support. If we break below, you've got the last stop on the train at 410 to save it. But you drop below this channel, you drop below this band of support, then you're going to start coming down pretty fast. And there's this level here at about 406.50, 407 that we had some prior lows. But notice on the volume over price profile, you do have a hole in the charts. So if you were to lose, 407, 406.50, not a lot stopping it from going down and testing 400 again. Qs, little different situation here. We did reach and tag the 200 yesterday and got rejected. We have been watching this zone here between 317.35 and 322. Notice the posture of the 8-day. I would, again, use that 8-day as more or less a level that you want to stay above if you're tactically trading. And that comes in right at 317.25. So that aligns really well with this support zone here. And really what the bulls need to see happen is a break above the 200 in gold, fill this baby gap, and break above the big downtrend line coming off the highs. And then those both come in at 330. So if you're looking for a green light long, that would be it. On a break above 330 and this gap fill and the 200, you would have accomplished three things: taking out the 200, filling the gap, breaking the downtrend line, and opening up a path higher. My first target here is this large volume over price bar, about 337.50. But then above that, room to run up for this little open gap. Notice strong RSI, strong PPO, but notice the PPO is flattening here. If we were to lose the 8-day and start rolling down, you're going to get a bear cross on PPO, and you're going to see RSI break back below 50. So, all these things move together. So when you're taking a snapshot of the chart that you're trading, as you look at price, keep an eye on your indicators for a heads up on what may be coming down the pike. No need for panic now. I would get concerned on a break back below the 8-day. And you could see here we had that zone back in late April where this had trouble, and you can see the top of this profile aligns really well with 330. Here it is on the Qs, 1 hour. Got a pivot point here at these lows at 319.50, and then you've got the bottom of that support band, 317.50, 317.25, and then you can see the support levels below. and you can see the open gap above to 329.60. So, and don't forget, you've got the big downtrend line coming in at 330. So there's a dual level of resistance right there. On IWM, notice on RSI, we're moving into overbought territory for the first time in a long time. You have to go way back in the charts to see that. But we took out this super high volume bar here at, just going to call it 188. You can see that we've been walking up this 8-day. We broke above the downtrend line, and now we're trapped between the 200 right here and the downtrend line. What you want to see as a bull is a break above the 200 and a break above 194. That will open up 198, 199 on the upside. If we were to roll down and lose this uptrend, or excuse me, lose the downtrend line, I would expect a move back down into the 8-day, down in here in the 188, 187.50 area. And then we'll have to see if that holds and it can break out again. But, you know, as long as you're above that downtrend line, I think you're okay to be long. But what you really want to see is get the 200 taken out, and so it can move higher. We had this big rising wedge forming on the 60-minute. You can see that yesterday there was a gap left behind. So you can see that 190, what was the high? 194.62 was the high. So see if we can stabilize against the top of this gap here at, that's not 198. This should be 190.80, not 198, 190.80 on that gap level, about $1 wide. See if we can get some support here and then break back above 194 for higher ground. Keep in mind that this move has been largely uncorrected, right? We haven't really had a pullback from this impulsive move. So as always, you know, you got to stay on your toes and just know the level where you don't want to hang out long any longer, or rotate to a short position if you're tactically trading. So keep these levels in mind. If you lose 192, you're going to most likely fill this gap. And then looking back on the daily chart, anything much below 190, you're going to be back below the daily downtrend line. And then that will again become resistance for the next move. So you don't ever want to break out and then come back, because then it looks like that was a fake move or a bull trap, if you will, where everybody that was long, when price rolls over here, then they're going to want to be exiting their positions, and then that gives fuel to a more powerful move to the downside. So that's about it for the indexes. I'm going to get to work on the review of our FATMAAN names and a few other selected ones, and I'll be coming at you with another video in the short future. Until then, have a good trading day, and talk to you soon. This has been Chris Buss with Traders Profit Compass. Talk to you next time.